The housing market again, this time with John Pasalis. He's president of Realosophy Realty. John, take us through your take on what's going to happen to variable rate mortgages and what happens to the Canadian housing market as a result.
You know, I mean, it's going to be very interesting because the housing market, in particular in markets like Toronto, is not just moderating, it's slowing down significantly. And we have yet to really feel the impact of higher rates in our market today because most buyers are buying based on rate holds they got back in February or early March before rates increased. So, you know, if we look at the sales in May, we're probably going to be at 20-year record low if we sort of skip over the COVID lockdowns in 2020. And prices have dropped significantly, in particular in the suburbs. So I think the next couple of months are going to really tell us a lot about how the housing market can adjust to these rapidly rising rates.
Because you're telling us that current buyers or recent buyers are working on interest rates that they've been able to negotiate with their lender in the past. That situation will be eclipsed by higher rates for purchases coming up this summer, correct?
Absolutely, yeah. So a lot of these rate holds are going to be expiring in the next month or so. So anyone buying in July and August is going to be buying based on these higher interest rates. And we're going to see how that's going to impact demand and how many buyers are still in the market because a lot have pulled out in the past couple of months.
What kind of what kind of price decreases have we seen in the Toronto market? You highlight the suburbs in particular.
Yeah, so I mean, if we look back in February, which is the peak, you know, low-rise home prices, so that's semis, detached row houses, were roughly in the 1.7 million price range, and they've been falling basically every week since then. And we've ended May kind of in the mid 1.4 range. So that's a really, really big decrease in a short time. And it's impacting a lot of buyers who bought homes in February and actually have to walk away from those purchases because the home they bought isn't even worth what they paid for it, and they're having a hard time getting financing.
Are homes becoming more affordable? Not likely, because as prices come down, the cost of borrowing is obviously going up.
Yeah, exactly. And I think that's the challenge. I mean, something's got to give. I mean, when we have kind of rapidly rising rates, I mean, the only way people can still afford homes is if prices fall. And we're seeing that adjustment happen in the market right now. And I would not be surprised if we see some pressure in the months ahead as rates continue to rise.
Do you have any advice for, let's say, first-time home buyers who thought they were close earlier this year and are now watching prices come down and mortgage rates come up? What should they do? Should they stand back and delay their purchase?
You know, I think you need to be active in the market. You don't necessarily need to jump in right away. I mean, if we have clients and we still see prices trending down, I mean, maybe you just hit pause a little bit and wait to see how further they'll go. I think if you find the right property, and that's the challenge in any market, at the right price, you know, at the end of the day, anyone who's buying today has to assume that prices may drop further. But a lot of the people we speak to, I mean, are kind of, you know, willing to take that risk because they see how high prices were a couple of months ago and they're buying for the long term anyways.
What's your take on people who are already paying a mortgage? David George Kosh took us through some of the numbers where these increases in variable rate mortgages can be very meaningful in terms of the increased number of dollars that you've got to pay every month on the mortgage. However, as we also know, banks have stress tested their clients, expecting them, I believe, to show that they can endure interest rates that are at least 2 or 2.5% higher than the rate that they're signing on for at the time that they get the mortgage.
Yeah, I don't think we're going to see a lot of pressure on households right away because a lot of the people, even with variable rate mortgages, their payments don't change as rates increase. Most variable rate mortgages, what happens is just the portion of your mortgage payment that goes towards principal declines, more of it goes towards interest. So we're probably not going to see a lot of big impact in the short term. What we're probably going to see are people whose mortgages are renewing right now and have to renew at much higher rates than they probably got 4 or 5 years ago. It's probably going to impact those households a lot more than people who currently are locked into interest rates.
What about buyers who are interested in properties as an investment or in terms of becoming a landlord? Do they view these changes any differently than people looking for a place to live?
Yeah, I mean, certainly. I mean, I think, when we look at the investment decisions, certainly the low interest rates are what fueled a lot of the demand for investors. I mean, it's easier to rationalize properties that have a 2 or 3% return when you're only paying 1.5% on your mortgage. But when you're paying 4% on your mortgage, it's not as great of an investment. So a lot of investors are probably going to, hit pause, not jump in. Some are going to see the low prices as an opportunity to jump in. But my feeling is overall, we're probably going to see much lower investor demand in the housing market in the next year or so.
And what about the condominium market? Is it more dynamic in terms of pricing and responding to factors like this in pricing and demand?
Yeah, it's interesting. So the condo market's slowing down just as rapidly in terms of sales, but we're not seeing a big adjustment in terms of price the same way we are in the low-rise market, primarily because a lot of these sellers are investors and they don't necessarily need to sell. One of the reasons why prices are falling in the low-rise suburban market is a lot of people who bought a home in February needed to list their current home in order to upsize, and all of a sudden they found themselves selling in a much slower market. And we're willing to take a lower price because there weren't as many buyers. So we're not seeing the same type of dynamics in the condo market, primarily because a lot of the people who own them don't feel a pressure to sell, so are a lot stickier in terms of their price.
John